Hello and welcome to the tutorial, and thank you for purchasing the SA103s tax compiler model. What exactly is the model for? Well, let's dive in and take a look. The main purpose of the model is to produce and compile your P&L for completing the SA103s for tax years 24-25 and 25-26. I'll just zoom in this a bit so you can see it. But this is the P&L output from the model, which is a one-to-one mapping of HMRC's SA103 self-assessment for income and expense submission form. The full output of an SA103 looks like this. It's a double page. Let me zoom in again so you can see it properly. It starts off with your name, your tax reference number, your business details, and then what is basically the income and expense or P&L. So that's your income, your allowable expenses, the net profit or loss, then tax allowances, basically capital allowances, and then a box for taking out personal use, losses brought forward from earlier years set off against this year's profit, and then net profits, and finally the total taxable profits from this business or losses, and then losses that you've got this year and what you want to do with it, which is set off against other income of the current year, carried back against previous years to set off against income, or loss carried forward to be set off against future income. The output of the HMRC SA103s, it is the self-assessment section for simple businesses with a turnover of less than 90,000. These are the sections that the model takes care of, which is basically just the P&L element, which is the income element, the allowable business expenses, and then the net profit or loss. The capital allowances section is excluded from the model because we're doing a cash basis, which is now the default method for doing your self-assessments. And under cash basis, capital allowances are not relevant except for cars. Cars still allow you to have capital allowances, but our model doesn't take that into consideration. We're going to be using the mileage allowance, which is part of the simplified rules. So there is no capital allowance section in the model. Just to reiterate that, so you're aware exactly of what is in the model and what isn't, it covers the business income, the allowable expenses, the net profit and loss. This bit is not included because we're doing the cash basis, and capital allowances are not part of the cash basis except for cars. But for cars, we're going to be using the simplified accounting, which means we rely on mileage, not capital allowances. This bit, as we're filling in the model, we'll be stripping out any goods and services for personal use anyway. So the figures that you'll be putting in will not have any personal use, so they won't need to be stripped out. So that bit's irrelevant. Losses brought forward are not in it because that's obviously a prior year figure that you'll already have. These two boxes are just automatically calculated from stuff that you've put in anyway, so that's not relevant, as is this stuff, so that's not relevant. And then losses brought forward and stuff like, sorry, not losses brought forward, but losses in the year. Obviously, the model will tell you if you've made a loss and what that loss is, and then it's just up to you to make a decision as to whether you've got other income in the year you want to set it off against. You need to carry some of it back to set against previous years, or you're going to carry it forward. The model will also track CIS deductions you've suffered. One thing you'll want to note about CIS deductions that you've suffered is that you will need to add those back in and gross them up. I'll talk you through that in the model when we get to it. Okay, so the SA103 online input is done using HMRC's online submission portal, which you'll either have for yourself or you'll be using some third-party software. I'm assuming that most of you will be using your own HMRC online portal. So this is what the page looks like when you're on the online portal. You've got the income here, which is turnover, any other business income not included as turnover, and trading income allowance. That's if your expenses are not more than 1,000, you can put £1,000 in there for your trading income allowance. But if you've got more than £1,000 in expenses, you can ignore that. And then your expenses. Your expenses you can put in as a single total value, which just goes in total expenses here. Calculate your net profit or your net loss. Or you can, if you want, do a detailed breakdown, which gives you the boxes that we've just seen. These are the same categories as the boxes we looked at and what's output on the P&L. However, you do not have to do that. You only have to do that if you've got a turnover of 90,000. And if you've got a turnover of 90,000, you won't be doing an SA103s anyway, because if you've got a turnover of 90,000, you have to do an SA103f, which is the full version of the SA103. But you can, if you want, even if you're on the SA103s, your turnover is less than 90,000, you can choose to put those in if you want. I don't know why you would, but the option's there. Let's have a look. Excel model. The Excel model is designed to produce the HMRC SA103s P&L output from bank CSV files following the cash basis accounting rules. So let's have a look. What are the cash basis accounting rules? Cash basis, let me just turn this back on for you. What is cash basis? It's designed to simplify tax accounting for small sole traders, partnerships, and individuals, not corporates. As of the 6th of April 2024, this is the default for non-limited liability businesses and partnerships with a few exceptions. It can't be used by limited companies or LLPs. LLPs are limited liability partnerships, and it can only be used by partnerships, so all the partners are individuals. So if any of the partners are a limited company or an LLP themselves, then that partnership can't use cash basis. The basic of it is you account for income and expense when the money is received or paid. Note, if you're a contractor, as I mentioned before, you've suffered CIS deductions at source, you must add those back into the income, gross it up. Otherwise, you'll be underreporting your income, so you need to add it back in. I will cover off how to do that in the model when we get there. You're allowed to expense capital except cars, land, financial instruments, non-qualifying intangibles, and non-depreciating assets. So ordinary plant and machinery, which is used in the business, can be expensed. So that'd be anything from vans, tools, computer equipment, printers, mobile phones, machinery that you purchased, etc. Capital allowances can still be claimed on cars, but not the actual expense of the car. So if you've got a car, we're going to be using the mileage rates under simplified expenses because the model does not take into account capital allowances. If you've disposed of a capital item that you've previously expensed, you have to treat the income from disposal as sales or income for the business. I.e., if you bought a piece of machinery for 10,000 a couple of years ago, when you bought it, you'd expensed it in full under the cash basis, so you claim the 10,000, and then a few years later, you've sold it for 5,000, then you're going to have to account for that 5,000 that you've received for it as income in that year. Another thing to note is if you've got car hire costs, where the car has got CO2 emissions of more than 50 grams per kilometre, then you can only claim 85% of that car hire cost. Certain trades can't use the cash basis, so you'll have to see BAM 72001 for the details, and that stands for Business Income Manual. Inside the model, there is a link to the Business Income Manual for that, so you can just make sure that your business is allowed to use cash basis. If you're VAT registered, you can use the cash basis. You've got the choice of two options. You can report your gross totals with the VAT in the payments that you make and receipt and the money you've received, or it can be net of both VAT on the money you've received and the payments you've made out. However, the model doesn't account for VAT, so you're going to be limited to using option 1, which, if we're going from the bank account, makes sense because when you make a payment, you're paying including VAT, and if you've received money from someone and you're VAT registered, when they've paid you, the VAT is in it. So the amounts in the bank will meet option 1. So that's why you'll be using option 1 if you're VAT registered. Now, simplified expenses for cars, instead of claiming the actual running costs and capital allowances, you keep a mileage log and claim based on mileage. You can do it for vans and bikes and motorcycles as well. You don't have to claim actual costs. You can claim mileage as well. For cars and vans and trucks and whatever, the first 10,000 miles is at 45p. After that, it's 25p. If it's motorcycles or bicycles, motorcycles just get a flat rate of 24 pence and bicycles get a flat rate of 20 pence. When you've got a car or a van or a motorcycle or what have you, you have to make a choice whether you're claiming actual costs or mileage under the simplified rules. Once you've made a choice for that vehicle, you can't then change it until you dispose of the vehicle or if you start a new trade. So for cars, vans, motorcycles, bicycles, etc., you have to choose one option, either simplified expenses based on mileage or actual running costs. And once you've made an election for that vehicle, you can't change it until you've disposed of the vehicle. So if you've started making a mileage claim, you're always going to have to make a mileage claim. And if you've started making actual costs, you're going to always have to continue to make actual costs until you get a different vehicle and then you can change. Home as office, instead of claiming for actual costs at home based on an apportionment basis, you can use HMRC's flat rates. 25 to 50 hours a month, you can claim £10 a month. 51 to 100 hours a month, you can claim £18 per month. 101 hours a month, you can claim £26 a month. Right, let's have a look at bank CSVs. What are bank CSVs? CSVs stand for comma separated value. It's the standard format that banks export statement data in for easy data manipulation for tools like Google Sheets and Excel. They have double column and single column amount layout for money in and out. Different banks use different styles. This is an example of a double column style. Note all values are positive. So you've got your date, your description, your category, and your money in and your money out are in separate columns, and they're both positive values. And there's your balance. The single column style is similar, except you only have a single column and money out is negative and money in is positive. So here you can see an example again. There's the date, there's the description, there's the category. This time money out, money in and out is in a single column, and as you say, money going out is minus, money coming in is positive, and there's the balance. The model that we've got can handle either money in, so money in or out in a single column, or money in and out in separate columns. So how do you export a CSV so you can get the data to put into your Excel model? So to export a bank CSV, you need to log into your online banking, usually not a mobile app, but the actual online website. Let me just zoom in here for you a bit. So you'll select the date range you want and hit enter. Note, for this model and tax purposes, use the 1st of April to the 31st of March for tax year transactions. Once a transaction date has been returned, you need to find the export option and choose CSV, but if you're lucky, there may already be an Excel version. Once downloaded, it should be in your downloads folder and you can open it and save it to where you wish to use in the model. So as you can see, this is the search bit where you'll put in your date range and then you'll hit search. Transactions will come up and then you'll find something that says download transactions. Once you hit that download transactions, you'll get a list of different formats that it can give you: PDF, QIF, and the one you'll be looking for is CSV. Or again, if you're lucky, there might even be one that says Excel. Excel or CSV will do, but CSV is more likely. Here's another example of a bank. Again, I've done the search for the transactions. I put a date in, I've hit search and it's produced the transactions. And now somewhere on here, near the bottom, there you go. It's got export.csv and export.qif. I just need to hit export.csv and it'll create an export and put it onto my downloads on the computer where it can be opened, and then I can copy and paste it into the model. So that's a brief overview of what you need to know. So let's have a quick look at the model itself. So this is what a dashboard looks like when it's been completed. This here is called a waterfall. It shows you a breakdown of the company's performance or the profit and loss, but it does it in such a way that it shows you how the individual expense and income items impact the overall performance. So you can see you start off on the left with your sales, and then straight away you can see that cost of goods, travel expenses are big chunks of expense, and others not so much. But you can also see how you've gone from your income down to your gross profit, down to your profit or loss before tax. You've got a mini summary P&L up here. You've got your little gross profit margin and your net profit margin. Here you've got sales split out by month, so you can see your seasonality. Again, expenses are split out by month there. Here you've got your profit and loss performance by month, again showing you seasonality. This is grouping your expenses by category. So you can see that your accounts and legal is quite a chunk, 2,000. Repairs and maintenance is a decent chunk, 2,000. But your COGS and your mileage are your big elements of expenditure. And down here is an analysis, again by month, of your mileage, So the yellow is the actual mileage that you're doing, and the orange is the cost of that miles on the simplified tax basis. So that's that. Again, this is a completed P&L that you'd be able to print off and use that to complete your SA103. So what else have we got? So then basically you have these: bank data 1 clean sheet, bank data 2 clean sheet, bank data 3 clean sheet. You'll notice that they're in blue, in different shades of blue. You'll notice that they also correspond with another tab with a similar shade of blue. That's because those two sheets are linked. So the bank data 1 clean sheets is where we do the actual analysis and apportionment of our bank transactions. The CSV raw sheets is where you paste in the CSV data and from your download, and then using that will populate the information in here so that we can do the analysis. Then after that, we've got the mileage for cars. If you're doing the simplest, I put this little schematic here just to reinforce what you can and can't do. So the model using cash basis, you must choose one per vehicle. It cannot be changed once chosen. Actual expenses, purchase cost yes, running cost yes, mileage no. Doesn't apply to cars, applies to vans, trucks, motorcycles, cycles. Simplified expenses, purchase cost no, running cost no, mileage yes, applies to cars yes, vans yes, motorcycles and bikes yes. Note, if you drive a combi van, you will have to check if it meets the criteria as a van or a car, because I know a lot of people, especially in construction, they buy these combi vans where they have an extended cab for the guys and then they have flatbed element on the back. There are certain rules about whether that qualifies as a van or a car, and it's all down to things like weight and loading area size versus cab size, etc. So if you're running one of those and you want to make sure you're using the correct tax treatment, you'd be best off looking that up and finding out, does it meet the criteria for a van or a car? Because if it meets the criteria for a car, you're only going to be allowed to use the mileage route for it. And if it's a van, obviously you could claim the actual cost. And also there are other tax differences, so you might want to check up to make sure if you're using it as a van that it specifically meets the allowance for a van. There's a separate one, mileage for bicycles and motorcycles. The reason being is because they have different rules. So cars and vans and stuff, they have to follow this lower mileage limit, 10,000 at 45p, upper mileage allowance. Over 10,000, it's at 25 pence. And then on motorcycles, they get a flat 24p a mile, and bicycles get a flat 20 pence a mile. So they have a different model. Now, let me just shrink this down. It's right. So if you're claiming actual cost, you cannot claim mileage also. I've already discussed that. You've got a choice to make. It's permanent until you dispose of the vehicle. And all you're entering here is business journeys. You don't get a different allowance for 2 different cars, you've only got a 10,000 allowance, even if you use 2 cars. You can't just go up to 10,000 in one car, then jump in another car and do another 10,000. So if you're running 2 cars, you can just put all the journeys on here because they all add up. It doesn't matter. Unless, of course, that one you've chosen to use actual costs, then you wouldn't keep it on there. Right, we've got Homer's Office next. This is for the apportionment basis, and you just have to fill in the relevant boxes here in the yellow, and it will calculate what you're allowed on the apportionment. And then this is a sheet for cash basis, cash expenses. Just zoom in again so you can read it. Note all expenses and income to be entered as positive values. Note all expense and income refunds to be entered as negative values. And if you need to gross up your income for CAS, you can add these as sales on this cash expense sheet. And you specifically want to add them with the thing CAS suffered, because you might pay some CAS, so you might put CAS paid out if you're stopping it from the wages of guys, so you might put CAS paid, but obviously you need to keep that separate. So you also can use this for putting down where you've got, if you decide you're not claiming apportionment on the housing expenses, you can use this to put in the flat rate simplified expenses. But again, we'll cover that when we get to it. This again goes through the what is the cash basis and the simplified expenses. And here is the links that I told you about. So if we click on these will take you to the relevant page. So that takes you to there. You can see the short form and all the rules and stuff if you want to read those. This one is the BAM rules for cash basis, so that'll tell you which, you read through those, you'll find out which companies can and can't use it. So it's basically partnerships with one or more corporate partner can't use it, Lloyd's underwriters can't use it, businesses with a current herd basis election, I assume that's farmers, persons with a S22 profit averaging election, businesses that have claimed business premises renovation allowances at any time in the last 7 years, businesses that carry on a mineral extraction trade, and businesses that have claimed research and development allowances. But you can read this for yourself, but if you're not carrying on any of those, then you'll be okay. That gives you a link to simplified expenses if you want to read it. And the last one goes into how to report VAT under the cash basis. And then we've got a whole bunch of instructions. So I'll start reading through these now. And then when we get to probably down to here where it says after download and draw CSV, we'll dive in and we'll do an actual walkthrough of pasting it in CSV data, analysing it, filling in all the other stuff and producing your P&L and your dashboard. So instructions. Enter details below. Name, business name, start date must be in date, month, year format. And end date must also be in date, month, year format. And the start dates and end dates are very important. If they're not entered correctly, the model will not work correctly. And for cash basis, the tax date should start 1st of April and end the 31st of March. So let's do this now. let's choose a name. Let's call ourselves Elon Bezos. Let's call our company Exxon. And a start date, well, we're going to go with 01/04/2025. And we're going to go with this end date of 31/03/2026. And again, the reason we're choosing that is because the default now is that you're always going to report in a tax year. A tax year is the 6th of April one year to the following 5th of April the next year. So in this case, it would be 6th of April 2025 to the 5th of April 2026. However, the taxman allows it to be the 1st of April to the 31st of March, and he treats that as a tax year that aligns with the 6th of April to the 5th of April. And because that's actual complete months, I recommend going with that because it's much easier than working with the first 6 days in April to the next 5 days of the following April, especially if you're trying to download information and stuff from the bank. It's just much simpler to remember 1st of April one year to the 31st of March the following year. So that is my advice, and that's what we're going to use in the model. Now I've got a cell colour convention. Any yellow cells are open for manual entry, like these ones. Any blue cells are locked, they're cell formula outputs. Green cells are open, but only limited to drop-down selections. And grey cells are open, and they're where we paste our raw CSV bank data. So as you go through the model, you will see these colours, and that's basically what they mean. There's one other colour that isn't on this cell colour convention, and it's orange. And that's because orange only pops up when there's a problem or something. It's a warning saying this is a problem, you need to do something. So if you see orange, you've got a problem that needs sorting out. But you'll see those as we start inputting into the system. Cell colour convention is applicable on input and processing sheets only. So the final output sheets are white for presentation and printing purposes. So that's why the dashboard and the P&L are white. So they're purely output sheets. Right, so having entered this and set up our model with the dates, and if we went back and looked at the thing now, you would see that everything says Elon Bezos and these dates. So let's just have a look, see that's right. Because this was blank before it said, but it actually said 00. Now you can see it says profit and loss 26, 25, 26. Go on to our profit and loss here. It says Elon Bezos, trading as Exxon, profit and loss tax year 25, 26, year ending 31/03/2026. And again, if you looked on some other sheets, Home's Office, this has got a graphical thing in now. And sometimes when you zoom in, you can see that again, Elon Bezos, tax year, year ending, and these dates have populated April 25 to March 26. Okay, so we've done that. We know it's all flowing through. Okay. Download a bank CSV for the date range required, which is this date range. I'm not going to be using that date range. I'm just got some dummy CSV data, which we'll have a look at in a minute, which we'll assume we've just downloaded. So when you've got it, you need to copy and paste it, the CSV data, excluding the headers, to the B6 cells of the CSV raw bank data sheets. So the raw bank data sheet, we're going to be pasting it into the B6. So we put up, when we do paste, we're going to put our cell selection there and do a paste, and then it'll paste the data in. And then once we've done that, we select from the drop-down lists in row 5 the correct header for the data as required for the bank data clean sheets. And we enter the bank name in the yellow cell L2 of the CSV raw bank data sheet. So if we go to this again, we're going to put a bank name in there, and then we're going to select in the green drop-down sheets a header that we need for the bank data clean sheets. We'll see that in a minute. No CSV dates will be converted to a number. Assigning the correct date heading in row 5 will correct this on the bank data clean sheets. CSV raw bank data sheets populate the corresponding bank data clean sheet. Each pair is color-coded for identification purposes. CSV statements come in 2 formats, money in and money out, which is the double column, separate in out, and a single column combined plus in minus out. Select the corresponding drop-down column header for the model to treat correctly. So we've covered all that. So I'll tell you what, let's dive straight in and bring across some CSV data and show you how it works. So here you go. I have got some dummy CSV data. I've got double column one and the single column one. This isn't the CSV data from a bank might not actually ever be quite as clean as this. There might be some gaps in the rows or some gaps in the headers. I'm not going to concern myself with that, because as long as it fits inside the grey area of our pasted area, it will work, because we're going to be picking the right header for the right column, and it'll sort itself out. And there's 2,400 lines per CSV bank sheet. So if you've got even with a turnover of almost 90,000, you'd be having a lot of transactions if you got 2,500 or 2,400 transactions in a year. If you have, there's 3 bank sheets, so you can split it out over more than one sheet. But I've designed it so you can have more than one bank. Some people have more than one bank, so you can do up to 3, or 2 on one if it's a long one, and 1 on another. You can't mix banks on a sheet. So how do you select this? Well, we want to select the very top part of the data. We don't want the header. We don't want any headers, and if there's a gap at the top here, sometimes some CSVs have a gap between the data at the header and this. Don't select the gap, just select the very first bit of data that we want. And you do that obviously by just putting your cursor over the cell and left clicking. Right, now there are many ways to select this data, but again, depending on the layout and stuff, it could be awkward. So I'm going to go with the simplest one that most people use, because you'll have your finger on your mouse. So you hit the left mouse button, hold it down while it's on there, and just drag it over the data so it's all got the grey area highlighted over it. Once that's like that, you can just tap the right mouse button, and this comes up, and hit copy. As you can see, the little green dash is marching around it now. Some people call it the marching ants. That means it's copied. So you can go across to our model. We'll take our first raw data, and we're going to select cell B6 by putting our cursor over it. Just zoom in so you can see it a bit better. We're going to put our cursor over B6 and hit the left mouse button once so that it's selected. There you go, you can see it selected because it's got the little green box around it. Then again, all you need to do is hit the right mouse button once, and again this menu pops up, and you can just select that first one that's paste, and it's pasted in the data. There you go. All the data that we've copied has been pasted in. If you check, you can obviously check your balance matches the balance that you were wanting to bring across, so you know that you've brought all the data in. As you can see, note CSV dates will be converted to a number. Do not worry, assigning the correct date heading in row 5 will correct this on the bank data clean sheet. See the tutorial. So this is connected to the bank data 1 clean sheet. So let's have a look at that. There you go. As you can see, there's nothing on this at the moment. Let's go back to the bank data, raw data bank 1. Let's put the name in here. We will assume this was a Halifax bank, and we're doing tax year 25-26. So we'll enter that in there. If we go back to our bank data clean sheet now, you will see that that one has renamed itself Halifax 25-26. And then let's go back again. Now what we need to do is select the right headers using the drop down menus. So we know this one is a date, so we'll select date. This one is a description, so we'll select description. This one we don't care about, it's not part of the information headers that we need. This one is money in, this one is money out, and this is our balance. Okay, so having done that, that's all we need to do. It doesn't matter if there were gaps in these or if the date was over there and the balance was over there. As long as we allocate the right header, it will sort itself out. Now if we look at the bank data 1 clean sheet again, you can see, let me just, there you go. It's just that because it was zoomed in too much. You can see the date has corrected itself as I said it would. The description's here, the money in is here, the money out is there. Money in out is blank because obviously this is a double column one without money in and out, and there's the balance. Right, so we've managed to successfully paste in that CSV into our raw data. We've assigned the headers, and the information has been transferred onto our bank data clean sheet. So what have we got to do next? Let's have a quick look at the instructions. Bank data, identify and apportion transactions. Move to the relevant bank data clean sheet. Under header HMRC category, use the drop-down list or type and select from the list the relevant category for each transaction. Note for cars, vans, etc. you can use actual cost or simplified mileage, not both. If using mileage, select category, exclude mileage method, or leave blank. I would advise just leaving it blank. So if you select the exclude, it's just going to ignore it anyway. And if you leave something blank, the model ignores it as well. So you might as well not make work for yourself and leave it blank. You can if you want. Obviously, if you really wanted to allocate everything, you would choose exclude mileage, but if you just want to do speed, you can leave it blank. For cars, you cannot include the capital cost, irrespective if you're using actual or mileage method. For vans, you can include capital costs if you're doing the actual method. No, home as office is specifically costs associated with working from home. Business premises costs, cost use, are not home related. No, annual investment allowance is to be ignored as not relevant for cash basis tax purposes. No, trading income allowance is for claiming instead of actual expenses. It can be ignored if your actual expenses are greater than 1,000. No, non-business can be used for non-business expenses, or you can just ignore these completely and leave blank. Again, for the same reason as up there, if you select non-business, the model ignores it. But if you also leave it blank, the model ignores it. So it's much quicker to leave it blank than to go down and go non-business, non-business, and assign percentage to it. So I just leave it blank. Under the header business use percentage from the drop-down list, select the relevant percentage business use. Use the checkbox column L to watch out for errors. So I know that all sounded gobbledygook. Let's just go on and show you what it all means in reality. So here you are. This is all our data. I'm only going to do big ones because I don't want to be here all day. This will be a long video anyway. So I'll assume that a lot of these small ones are mainly personal use. Okay, account fees, fine. Say this is bank interest. So you start typing bank, and it's there. It's got bank interest. Obviously, I typed bank because I knew that bank was there. If you don't know bank's there, as I say, when you click on a box, it will give you all the allowable options. But again, I know it's bank, so I'm going to go bank. Now, it's come up with missing, and that's because you've selected something here. So what it wants now is a business use. So this is that checkbox that I told you about, and that's the orange colour that I said is a error warning. So it's saying you need to select the business use. All you're doing is you can click on that and select, or you can just type it in what you want. It won't let you type in something that doesn't exist, so you couldn't, for argument's sake, claim 110%, because that's not a thing, is it? You can only claim 100% of the cost that you've incurred. You can't claim more of it. So put that back down. What have we got here? Right, we'll put this one in, council tax, because I'll show you this is part of the Home's Office cost. We're going to use Home's Office apportionment just to show you how it works. So you want to put Home's Office, and that's council tax. So we'll put that in there, and you'll want to put 100% because the apportionment is done on the apportionment spreadsheet for Home's Office. Ignore all that, that's sales. So we've got sales, 100%. Shell. Now again, if you were let's say you had a van and you decided you were claiming actual running costs, you would put that in as, let me just, I don't know which one it would be now. Van expense include actual cost method, you would use that one. That's only if you've chosen to use the actual cost method. We're not going to do that. We're assuming that we're using a car and therefore we've got to use the mileage. So you could choose exclude mileage method so that it ignores it, but we can just ignore it by not putting anything in. So I'm ignoring that one. Computer, this is what I talked about earlier. This is plan, but on the cash basis, we can claim all that computer, and it's just going to go down as stationery and office cost. So we'll put that in. Let's assume that you use it 50% for business and 50% your daughter uses it for your homework. So put 50%, and you can see that it only claims 50%. So by doing this, you can see now, when I said earlier, we don't need to be faffing about with the goods and services personal use. We don't have to make an adjustment. We're doing it now. So all the figures that we end up reporting in the P&L will just be pure business. So you will not need to bother about that box at all if you've done this correctly. Amazon will ignore all that nonsense. John Smith, I'll ignore him. Eon again, this is some house cost. This is Home's Office, gas, electricity, so I'll put that there, 100%. Bank charges, that's bank charges. And then this is sales. This is sales. This is cost of goods bought for sale. This is other income. Any other income not including box 9. This is income. This is repairs. So this one, we're going to have this as repairs not home related. This is income. This, by the way, these hashes just mean that it's because we're zoomed in a little bit and it's the way it's adjusted it, it doesn't quite fit in the column. It's actually not an error or anything. You can just ignore that. If I zoom out, or if I change the size of the column, there you go. See, it's corrected itself. That's sales. That's cost of goods. And that's cost of goods. Right, we just have to make sure we allocate all these 100. 100. 100. 100. 100. 100. 100. 100. 100. And that's it. That one's been allocated. Now, let's just go back and I'll show you that it does work also for the other one, the double sheet one. If I go back to my dummy CSV data. So again, we want to bring this in. So if you remember, I'll show you this time how to do it a different way, but click on the first bit of the data that's actual data you want to bring in with the left mouse button. Then with the keyboard, hold the shift button down, and then with the left and right arrows and down arrows. Oops, wait there, sorry. That went into the cell. I didn't want that. I just wanted to select the cell. So just left click on it and then hold the shift key down, and then with the left and right and up and down buttons, you can just tap it till you've got it over to the number of the columns that you want, and then you can just tap down and get it so that again the actual data area that you want, all the data is highlighted with the grey. Now then, instead of hitting right and copy, this time you can do hold the control key and hit C. And if you hold the control key and hit C, as you can see, you've got the green marching ants again. That means that data has now been copied. We can go across to our model again. This time we're going to put it on raw data 2 because it's a different bank. And let's zoom in a bit so you can see it. Okay, so we want to select again B6. This is where I want to paste our data. So this time you can hit Control V and the data has been pasted. As you can see it's the data. It's all come in. It's the same balance that we had when we copied it across. And the starting balance, so it's copied everything across and it's just got the one column. Right, let's give this a different name. Let's call this Co-op 2526. Hit enter. And then, as you say, again, it's lost the formatting on the date, but don't worry about it. We know this is a date, so we'll put date. We know this is a description, so we'll put description. We can ignore this one, we don't care. This one is the money in out, because it's got money in out. And this is the balance. So there you go, you've allocated the headers now for this. So if we go over to raw bank data 2, which means go to clean data, bank data 2 clean sheet. There you can go. If we zoom in now, zoom in a bit, you can see it's brought that in. It's renamed it Co-op 2526. You can see it's got the money in out column. This time the other one didn't have. But what it's also done is it's automatically figured out which of these two columns that needs to go in. Is it money in or money out? And now all we have to do is do the exact same process that we did before. We can just go down it and allocate everything that we want to allocate. So I'm not proposing to do that again because you've seen it once already. It will just take up more time. That was just to show you that it does work for both different types of layout. Right, so we've done that. What else did we note? We noted that on that last sheet we had some Homer's Office expenses. So let's go to Homer's Office sheet. If you remember, we had then two expenses for Homer's Office. We had the council tax and we had the utilities. There they are. It's already pre-populated now from what was allocating them. Now the Homer's Office sheet is actually, it's one of the most complicated sheets on here to make work. So first off, if you're not using apportionment, please enter 1 in the box above. If you are, leave it blank. Let's remove that, but when we do, it will probably give us a load of errors. There we go, and that's because we haven't filled in this information. You're always going to want to, even if it's 0, if you're not using if you're using apportionment, you're always going to want to put in total rooms and number of rooms used for office, even if you don't use it that month. So at the moment, we know we're going to be using definitely these two, but let's say you've got 5 rooms in the house, excluding kitchen and bathroom. So we're gonna put in 5 in here, and now it's telling us that the office is missing, and we use 1 room for the office. There we go. So it's calculated now our room utilization. Now what's missing is the work hours. So we've got work hours If we didn't do any work hours that month, that's fine, and that month's fine, and that month is fine. Obviously, we've got a cost this month, so we've done some hours. Let's call it 101. And then this one 101 because we've got hours in that month. And let's say we didn't do any more. Now you can see now that it's calculated what we can claim for that month, £4 and £7. Now, obviously, you're allowed, if you do 101 hours, to claim £26 a month on the flat rate scheme. So you might decide that you wanted to claim the flat rate scheme. In any one tax year, you can only do one or the other. You can't flip-flop every month. So you either have to do apportionment or the flat rate, the simplified. If you are using the flat rate, you're going to have to put one in there. Again, if you are using flat rate, then all of this needs to be cleared. I won't clear it for now, but it's saying that this doesn't match because now you're trying to claim both. But if you were going to use flat rate, you would put one in there and clear this off. But now let's just assume you were using a flat rate. Do that on the cash expense sheet. So this is the cash expense sheet. Now all expenses and income are to be entered as a positive value. All expense and income refunds are to be entered as a negative value. Now, if you need to gross up your income for CAS, you could add these as sales on this cash sheet expense. And I'll come back to this. Right now, I just want to show you what you would do if you were claiming flat rate for the Homer's Office. So let's say you were claiming Homer's Office on the flat rate. And it was Home as Office, flat rate, 101 hours, April, and the amount would be £26. Now, you would think for category, you pick Homer's Office, but you don't, because picking Homer's Office puts it onto the apportionment sheet. We don't want that. So you'll just put it in Office cost, and it'd be 100%, and that would claim you the full £26 for that month, right? And you would just put that in for each month that you're claiming it for, dependent on the hours that you do. We're not going to do that because we're claiming apportionment. So let's just say this was a cash. Let's just say this was repairs on the house. Repairs, Home as Office, apportionment, and let's say it was £250. This one you would pick Homer's Office, and there's Homer's Office other including repairs, so you'd pick that, and again you would keep it as 100%. And then if we went back to our Homer's Office sheet now, you can see that the £250 we just put in from the cash expenses is there. So let's allocate that 101 hours. And again, it's claiming the £7 based on the apportionment. So that's how the Homer's Office works. You'll know if you've done it wrong because all the orange things will pop up, and it usually tells you what's missing. And if you rewatch this, you'll be able to figure it out. It's not that hard once you understand what it's doing. Right, so that's Homer's Office. What else haven't we done? We haven't done mileage. So we've got mileage. This is for our mileage. No, if you were claiming actual cost, you cannot claim mileage. A chosen cost treatment for a vehicle is permanent until disposed of. enter business journeys only. So we're doing a car, so it goes on the car and van one. If it was a motorcycle or a bicycle, we'd use this sheet. What we just put down is our business travel. So let's say in April, we went from Manchester to London. There you go. And then 2 days later, we came home. And by the way, if you're doing mileage, you have to keep this information. It's a requirement of HMRC. They could at any time ask you to produce your mileage log to prove what mileage you've claimed. And in the past, there was once a very funny story of a chap claimed loads of mileage and he produced a mileage log. HMRC went back and looked at his MOT certificates for 2 years and found out that he claimed more miles than the car had even done on the 2 MOT certificates. So those are just some of the things that HMRC do to check people out. So yeah, keep your mileage log just for your business use. Let's say in May, we went from, I don't know, A to B, and that was 1,500 miles. And then the day after we came home, another 1,500 miles. And then in June, so that didn't I? We went on another long trip. This time we went from A to Z, and that was 3,000 miles. And then the day after we came back, and miles. And you can see, by the way, that as we're doing this, it's doing a summary. It's giving us our total claim, giving it by month, and the check boxes are all, so you want to keep your eye on that, but it should all work out. I said June, didn't I? But anyway, I did all that in May. I had a big May. And then let's say in July, we went from Land's End to John O'Groats. I'm going to do that for now, and I think that's about 800. Depends if you walk it, it's 12. It's weird, if you walk it, it's 1,200 miles. If you go by car, it's about 890. And then the day after we came back, see, there you go, it's done. And from June, tells us how much we're claiming cost-wise. And then we didn't do anything till December. And in December, we went to Bethlehem. We were following the start of Bethlehem. What's that? Is that 3,000 miles roughly? I'm just making that up. And then we came back at the end of December. And then in February 2026, obviously, because there is no 2025 in this year, that February 2025 in this tax year that we're doing. What am I doing? We went on Valentine's Day and we went to Rome. We were looking for Juliet. It's at 1,300 miles. Yeah. And then we came back a few days later, maybe a week later. Maybe we had a good time. Who knows? Doing. There we are. So there's some mileage. It's all in. It's populated the boxes for us. That's how the mileage sheet works. The last thing we want to go back to is our cash expenses. So we had one cash expense. Let's just have a look at CAS. So let's say you are a construction guy and you've obviously the money that hits your bank account has had money deducted to CAS. You need to gross that money up. Obviously you can't change the figure in your bank, but obviously you can report it here and it will be pulled in. If we want it to track the CIS we've suffered, you'll just have to put CIS suffered, because again, I don't know, you might also have subcontractors that you subtract some CIS from them and pay over to the taxman, which you might pay them in cash. I don't know, but for whatever reason, I'm just, in case there's any other reason you might put CIS on here other than suffered, if you want to track the CIS suffered, use CIS suffered. So let's just put a date in as and we want CIS suffered. It has to be spelled correctly, I think. It doesn't matter if there's anything after it, but as long as it says CIS suffered, and let's say you had £1,000 deducted. Right, now, because we're saying you had £1,000 deducted from your income, that means you need to put this in as income. So that's income and 100%. So that'll now add that £1,000 to your income, so that whatever you've had in your bank plus this is what you actually should have had as income. And that didn't work, so let me just take that out. I've not spelled the suffered right, have I? There we go. Now it works. There we are. £1,000. Do it again for a different month. I won't bother changing that, it doesn't matter. Let's say that was £500. And then that's, so you get it's turnover, and then 100%. There you go. So now you know for your SA103 or your tax return, there'll be a thing there that asks you to tell it what CIS you suffered. You can now look on this cash sheet and see. The other things that I was just going to say, let's say you'd made some sales in general. We're not talking about CIS now. We're just talking about you're just someone else who's made some sales. Let's do August. Sales cash 10,000. Right, you put that in as income. Oopsie daisy. 100%. And then let's say you had to refund someone. you gave them £2,000 back in cash in the same month. Sales refund. Put that in as a because it's a refund, you put it in as a minus. Let's say you had to give them £2,000 back, and then but it is sales, so put it in turnover. There's a sales refund. Put it in as 100%, and then let's say you bought some stuff for cash in September. Goods. And let's say it wasn't cost. Let's say you paid an accountant. Of course, you won't pay an accountant because you've got this sheet now. Professional fees, 100%. And then let's say you felt guilty and you thought he'd overcharged you. Which is a highly unlikely scenario. But you put the refund back in as a negative, and you put it again down to accounting, deal, another, and add the 100%, and that's that. So that's in a nutshell everything you need to know about how this works. This is now all complete. We've allocated our banks, we've done our mileage, we've done our homeowner's office, we've done any cash expenses, we've got our CAS stuff with deductions, and we've grossed up our sales. So we now should be able to go to our P&L, and it's all complete. We can print that off and use it to complete our SA103, and then here's our dashboard with everything filled out as well now. So we could do with some better net profit margin. We've got a good gross profit margin, but so we seem to spend a lot of money that's not like cost of goods. So there's our accounting cost. That's the 4,000 less the 1,000. So that shows you that the cash expense, negatives for refunds and positives for not refunds, works. There again is our August sales. That's the 10,000 minus the 2,000. So it also works for sales. So it doesn't matter in cash on the cash sheet. If it's not a refund, you put it in as a positive value. If it's a refund, either a refund you're giving or a refund you're receiving, you put it in as a negative. Yeah. We can see we do a lot of sales in October, a lot of sales in August, and we did some nice sales in March. We had a huge amount of mileage claim. There's that repairs and maintenance, 1,000. Here's the mileage all split out by month, how many miles we did for the month. That May obviously was that big one, and what we claimed mileage wise. And this is the profit and loss per month that we made. This is our little mini P&L summary, and all the P&Ls match. So the 23,000 sales would be those two. 19,700 is the gross profit, which is that one there. 722 is the net profit, which is there, and that also matches the figures here. 22,300, 7,228 is the net profit. So that's basically the sheet. If you've got any questions when you're filling it in, get stuck on anything, feel free to drop me an email and I'll try and figure out what it might be or where you might be going wrong. And good luck with filling in your SA103s. Thanks a lot.